My name is Ryan Jackson. I'm a real estate investor here in the state of Texas. Today, I'm going to talk to you about how you can invest in real estate in the state of Texas. Don't forget to hit like, don't forget to hit share, and of course, most importantly, don't forget to hit subscribe. It's really not that hard to understand my concept here. Your money into my office. That's what it says here. What I do is I actually borrow money from other people. We don't really necessarily have a contract. We have a deed of trust. I talk to the lenders, private lenders, like, can I see the contract that we're going to have? Well, it's really simple. We come up with a deed of trust that the attorney puts together after we come up with some terms. You know, what is the terms that we're offering? Well, I don't want to put it here on public radio because it might change in the future as rates go up and down. So I don't necessarily want to quote on that, but a deed of trust is simply a deed that says that I own it, that says that you have a position against this property in the event that I do not pay you, that you can foreclose on me. That's really what it is. And then you would take it to the county auction. You would probably hire the attorney that drafted it to go auction this property off if I wasn't available to pay you back, whether I'm indisposed or I'm dead or something like that. So sometimes you might have to exercise that if I pass away or if my family couldn't take care of it or something like that. But the good thing is my family can take care of it. I got a really good credit rating amongst my private lenders, so you wouldn't really have to worry about that. But what it really means is if the person you're lending money to does not pay that back, you can then file the foreclosure proceedings and take the property away as collateral. So let's talk about that versus investing onto Wall Street. Okay, so right now, if you decide you want to go buy some shares of something on Wall Street, such as, you know, everybody's pretty popular on Tesla or Amazon or Google or some of these big companies that are traded on Wall Street, let's talk about their bankruptcy situations versus somebody like myself's bankruptcy situation. Okay, first of all, I'm not here to tell you that, yeah, I'm going to default on this and or file bankruptcy and all this stuff, but I want to compare the two products because over on Wall Street, you're investing into Elon or Jeff Bezos or Bill Gates or any of these guys, you're investing in their companies, into their machines. They give you common stock for that. So now you have common stock that you can turn around and sell to somebody else that wants to buy that common stock. Well, what happens if nobody wants to buy that common stock? The value of the common stock craters. That there's no demand or there's no market cap, you know, hands that are trying to buy this paper, market will eventually collapse. Your shares are worth nothing if that was to happen. We've seen companies go belly up. I mean, let's talk about General Motors in 2008. Let's talk about Washington Mutual in 2008, Goldman Sachs, Lehman Brothers. Let's talk about all these companies that went belly up and filed for bankruptcy back in 2008. Well, they filed for bankruptcy protection. Your stock went to absolutely nothing. My self back in 2008 decided it would be great to leave my physical education class and go buy Washington Mutual stock on the day that it actually collapsed. I got home that night, pulled up Yahoo News, said Washington Mutual has now filed for bankruptcy or has been bought out or something like that. Or I can't remember exactly what happened, but their shares went to like 13 cents. So my $4 stock that I bought, trying to make a quick little pivot because it was $4 versus $400, so it was easier to buy as a college student, it cratered that night. So I'm sitting here looking at this and I'm like, holy shit, I just lost like 3 or 4 grand. I'm a college student at this time. That was a bunch of money for me. Now, what happens if you go buy some Puerto Rican bonds and Puerto Rico files for Chapter 13 bankruptcy? Your Puerto Rican bonds that you invested in are now trash. What if you would have bought General Motors bonds, say, I don't know, pre-2008, you know, you're buying their debt, they went belly up in 2008, your bonds are now worthless. That doesn't mean, hey, we're going to file for bankruptcy and we're going to still stay in business and our new stock, whenever we figure this out, you're going to have that value. No, it doesn't mean that. It means your money just went down the toilet. So if you compare that to real estate, especially in the state of Texas and especially with me, but what happens if I do go belly up? You lent money probably on half price brick. I don't buy bad deals. I've been doing this long enough that the odds of me buying a bad deal are very, very low. Even if I did buy a bad deal, I'll be able to get myself out of that because I know what I'm doing. What happens if I fall over dead? You have a deed of trust. So the deed of trust says that, hey, you're going to pay me to these terms that we agreed to, and if you don't, then you're going to go ahead and file foreclosure proceedings. Once you foreclose, that asset becomes yours, or it's going to get bought at auction by the highest bidder, and you will not be able to outbid those people. So you'll get your money that way. Compare investing into real estate as a passive investor, not an active investor, not the guy that's actually doing the rehabs like me and handling all the rentals and stuff like that. I'm talking about actually your money into my office. What am I going to do with your money into my office? Well, what I'm going to do is I'm going to go ahead, I'm going to buy some half-price brick houses in the state of Texas. Half-priced. So since I'm buying half-price, that tells me that there's already equity in these things. The banks will give me 75%. Well, Ryan, why don't you just use the banks if they'll give you 75%? They won't give me 75% on a fully invested, broke down, foundation crack, walls falling in, full of squatters, full of they won't give me 75% on that. They won't. They want to see that it's in working order. They want to see that it's ready to go. And then what they'll do is they'll go ahead and give me 75% on these properties. But so if I'm buying half price houses, mostly brick houses, because they're the ones that hold the value the best, and I'm buying them for 30 to 50 cents on the dollar, and I borrow your money and I borrow rehab money, and it's under 75%, there is no problem for me to go hit the refi button with a bank. I'm off your money and onto a bank's money. And now I'm making payments to the bank. The bank does not want to loan money on a trap house. They don't want to send an appraiser to step over people that are getting their arms up full of heroin to write an appraisal, if that makes sense. I need funds such as your private funds to buy these and fix them up and then get them over to the banks. Well, here's also where we're having some pressure with the banks is the banks are running right now, here it is Q4 2023, banks are quoting us 9%, but they're wanting a 20-year term, okay? So if you amortize a 75% loan to value on a property at 20 years with an adjustable rate mortgage over 5 years, it makes it very, very difficult to do business, okay? So that means I have to buy these things at like 30 to 40 cents on the dollar and do a light rehab to make them make mathematical sense. So really what I'm looking for is I'm looking for private investors that want to do some interest only loans. I got one the other day for $150,000 interest only for 3 years. And at the end of 3 years, we have a balloon, and the balloon pops at the end of 3 years. So 36 payments that I have to make at the interest only. And then after that, I have to refinance, or I have to go ahead and talk that lender into a renewal if they want to renew. Hey, they might like the checks. The rate of interest is higher. They might just say, hey, I'll renew at this. If the rate of interest is lower and they want to keep that same payment, probably the best thing for me to do is to go ahead and refi with a bank and give them their money back. You do get some refinance risk exposure whenever you invest into real estate, because if you're at 12% and the banks are at 4%, like I'm gone, see it. I have to go to the 4% with a bank. But right now we're in an interesting market where rates are so high. I think CDs are paying 4 to 5% right now. I'm paying way more than CD. I'm also backed by half price brick in the state of Texas. The CD is backed by the FDIC, that they're federally insuring these certificate of deposits. So they're actually insuring those, the federal government is. I'm insuring these by half price brick and a great credit rating and great abilities. So if you're looking to invest into real estate and you don't necessarily want to buy a house and you have a substantial amount of money, loan it to me. I'd be glad to borrow your money and go buy some real estate with it. Let's face it, if it's in Metro Texas and it's under 100,000, you probably don't want to invest in that thing, I'll be honest with you. You need to size these up. Like, is it brick? Is it falling over? Go look at these properties before you invest in them. At least do a Google Street View or something like that, especially until you get acquainted well with whoever you're investing in. And remember, when you're investing into half-price real estate here in the state of Texas, not only are you investing into boxes, you're also investing into me. I thank people for that. And I really, really would love to earn your hard-earned money to invest into real estate here in the state of Texas, and I'll pay you a very handsome return. My name is Ryan Jackson. I'm a real estate investor here in the state of Texas. Please hit like, please hit share, and most importantly, hit subscribe. Thank you.